Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, with our weekly stock market analysis for the week of May 11th, 2020. What a powerful week we've had, both in a macroeconomic standpoint, coronavirus updates, as well as the stock market seems to have no top and continues to showcase bullish runs across all major indices and a number of individual commodities. And we'll review a number of those in our weekly update. But as we get started, as always, we want to say a happy Mother's Day to all mothers, including second mothers, those that have taken care of a child that's not necessarily their own, but loving them just as much, if not that much more. Also this week, major impact across the board from a bullish standpoint for all major indices, seeing significant volume as well as a large range of price, and pushing to some extent almost back to where we were several weeks ago prior to the announcement of a larger impact of the coronavirus. So stocks finished decisively higher across the board, led by the technology sector and significant gains in our overall energy sector. Despite large macroeconomic news specifically related to the United States, with over almost 21 million people have filed for unemployment over the last 5 to 6 weeks, which is significant if we include a few weeks prior, which is almost closer to 30 million people that have filed for unemployment, albeit short term, hopefully, but still a significant impact across the board. Now, we state all of that information to showcase that all of our major indices have been significantly higher over the last some number of weeks, with the leader of the pack in regards to retracing back to its original highs prior to the announcement of the coronavirus is the NASDAQ, or the triple Qs, who have seen just greater than 6.25% uptick in this past week's action, and we continue to see that. Now, the old adage, sell in May, go away, at least in the first full week of the trading action this past week, we haven't seen that. As we dig into the charts, we might be able to identify a few of those opportunities where we might be able to take advantage of some shorter term pullbacks, but it looks, at least from the chart perspective, and certainly over the last 2 weeks, there's nothing really that's going to cause the market to pull back. Now, personally, I disagree with that. However, given the news and how the market is reacting to negative news, specifically around unemployment and total job loss, we don't know what the market will interpret. Now, I still will follow along that this retracement is to be short-lived, and we'll dive into the charts and kind of showcase a little bit of those anomalies that we traditionally have seen. So we'll see you on the other side. As with always, we'll start off with our S&P 500 weekly chart. As you can see here, the last 2 weeks have been pretty much back and forth, bulls getting some as well as the bears getting some in the previous week. However, we have closed 2 weeks above a short-term trend line that we'll call out for you here that could come into play over the next couple of weeks if we feel that there is some bearish rotation that is coming into play, which I personally do. Going to go ahead and call it now that we do see some type of potential resistance coming in at roughly that $293 amount, just above where we are from a close perspective. But then at the same time, we do want to note that there are a number of things that are converging around those dollar amounts. Coming up on the high just of last week was just short of 295. So we'll call anything above 295 as a potential, as a short opportunity, looking for us to continue back and forth, back into range, and continue on within our trading range that we have seen over the last 2 weeks or so. But very aggressive, coming off of our lows going back to the end of March of $218, very aggressive bullish move. And then we have seen some sideways action, so we call that moving into balance, as we see both the bears and the bulls getting some type of opportunity to obtain some type of profits. Now, all things being equal, both on the daily chart, the monthly chart, and on the weekly chart do showcase some bullish momentum, but volume is slowly decreasing over the last few weeks, which could be an indication that no new buyers are coming into the market at these price levels. And at the same time, we do see some opportunity for, if we do break above this 295 this last week, we do see some movement up to just short of 300 as we move into the point of control, which is the highest volume over this last 1 year period, denoted by this red horizontal line. So we'll see what happens within the S&P, but still very bullish up until it's not, right? And we do anticipate some type of movement as we bump into one of our moving averages here, which is the 50 on the week side, as well as a low volume node, which could potentially showcase a little bit of a reversal for us coming into the middle part of this upcoming week. So we'll continue with our short-term bearish stance, but we also want to be aware of, if there are some potential changes, we'll take a look at adjusting our hypothesis moving forward. We never want to come in to any type of investment or any type of shorter term trade with too heavy a bias, because there are some opportunities for us to be a little bit nimble and adjust accordingly. And we'll move on to the NASDAQ. And we'll take a look at the NASDAQ in more detail. Coming off of the S&P, we still see very similar movement over the last few weeks. Bearish this previous week, and then just last week a very strong bullish breakout almost to the top end of our gap zone that we saw all the way back in February here. So as we get into this area, there is a likelihood that any type of positive news from an earnings perspective or coming out of Washington, D.C. could push this toward the top end of the range coming off of this bottom. But we do anticipate that this bottom range will hold as a little bit of resistance, coming in at roughly a $225 amount. And mathematically, it does line up with one of our Fibonacci numbers as a potential reversal. And this is something that we could take an opportunity, given this gap zone, to see that reversal moving back forward. Now, again, there's a lot of momentum and a lot of positive direction coming in to this past week, and we do see a nice little breakout above that $220 level, which caught a lot of shorter term traders on the short side with their pants down, so to speak. So this is a little bit of a short covering rally. You kind of can tell that a little bit because of the volume is just that much lower over this past week, but that does not mean that this cannot continue moving forward. But we do want to identify, number one, this gap zone, and we do have a low volume node going back several months as an opportunity for some type of pullback in the auction, roughly about that $226 level. So we do want to watch that moving forward over this past week, but very much above all of our moving averages. So it does have a little bit of support. If we do see a little bit of a reversal in the NASDAQ, we do want to target the high of last week as a potential opportunity for some type of support. And potentially, if that is broken, we do see a rotation back down into the 210 level, as we continue to look at a larger expansion of our balance zone that we've seen over the last few weeks. So we'll see what happens with the NASDAQ, and this gap zone is something that I'm keeping personally my eye on to see if we breach it. If we do get a number of days closing into this area, this could be an indication that there is an accumulation from a bullish perspective to push it just that much higher and go retest this highs of 237. So we'll watch that as we move forward onto the Russell, which has also had a pretty aggressive last several weeks, a little bit of a pullback as it touched on its 20-week moving average this past week, with a very strong sellers coming in to push it back outside of value below that $128 amount. And we saw this past week, as other major indices saw a very significant push, we also saw the Russell, which had the largest percentage gain, just over 7%, with about a 10.5 point range this past week, but failed to get back to its previous highs of this last week. Now, this could see some follow through, at least touching that 120, the 20-period moving average at 135, And if that does happen and we do see a little bit of sell-off from that level, we could see this as a little bit of a tweezer top, which would be a very solid bearish signal for us for rotation back down. So we'd have touched this area, roughly that $136 amount, 3 times. If that does happen, and then kind of pushing back down into range following other indices. But I do believe over the next week, 2 weeks, we will see at least a retouch of this 20 period moving average, and it's roughly about 3-4 points away from where we are today. And we do see a little bit of a balancing, kind of a curvature of our moving averages that would look at some type of resistance. Now, if we do break above that 137, we do have another gap zone that we'll just kind of call out here, which could be an opportunity for us to see continued pressure to the upside, given that there's not a lot of volume in this area. Very similar to what we saw on the NASDAQ. If it does push into that area and does have a number of closes of daily charts, we do see a little bit of a possibility to retest at least up to that 144 level, which is our 200 period moving average. So the Russell very strong, given some additional insight to US based businesses, which could continue to see impact from a negative sales perspective, could push this average moving back downward. So there's a lot of information to kind of curve us to the downside, but we are seeing the bull stepping in and holding us up. Now, is that new money coming into the market? Maybe, maybe not, but we'll see how it unfolds. The first few days of the week will be very important for us to kind of watch the Russell. And Russell is one of those indices that a lot of people don't necessarily follow, but given the impact of US-based businesses, it is something that we do recommend that individuals follow in their repertoire to ensure that we're looking at all your major indices and coming up with a broad market hypothesis. As we shift over to gold, we can see gold kind of coming into a very tight wedge. So something is going to happen, albeit of a break upward over the next week or a rollover downward into the next couple of weeks. As prices continue to consolidate and converge, there is some type of accumulation, albeit to the upside or to the downside over the next few weeks, because price will have to break out given the compression of these overall two individual angles kind of coming in together. So we'll see how that takes place, but we still are very bullish on gold. I do believe that we do see some additional upside in gold over the next few weeks or so, as we've come off this very bullish type of movement going back into the middle of March, and then we're kind of basing, kind of going horizontally, and then potentially my hypothesis is that we'll kind of continue this momentum moving forward as we see this 160 level, 158 level kind of holding as very solid resistance going back into March timeframe, but then also in the last few weeks we're seeing that as very solid support. So our hypothesis is sideways to up as a bias moving forward over the next few weeks for gold. So there's a lot of news, a lot of negative news, and a lot of information that's coming out that could be wearing on your psyche. I know it has weighed on mine. So please don't hesitate to reach out to loved ones, family members. We also have a community within my Facebook group, Dr. Cash, so please don't hesitate to reach out and don't feel that you're by yourself in any form or fashion, albeit if it's finance related or any other aspect. Being in kind of our self-quarantine and our social distancing for a number of weeks now has potentially weighed on your individual psyche. But hold strong. It's summer months, the sun should be coming out, and hopefully we can weather this storm together. But as always, if you have any questions, concerns, feedback, please don't hesitate to hit the like button and subscribe button, and but more importantly, provide some comments. If you like what you're seeing, let me know. If you don't like what you're seeing, oh, I'm sorry, you wasted 15 minutes. All right, I will see you on the other side. And as with always, it's your money and it's under your control. Take care.